It is done. The legal battle is over. The commodity classification is law. The ETF infrastructure is live. The Clarity Act has a Senate Banking Committee markup targeting the second half of April, with Garlinghouse putting passage odds at 90%. Ripple just reported the best quarter in the company's history, and Brad Garlinghouse just revealed on Fox Business that his company's treasury division processes $13 trillion in annual corporate payments, and 0% of it has touched crypto rails yet. Zero. That is not a threat to the thesis. That is the thesis. $13 trillion sitting on rails that haven't migrated yet, waiting for one piece of legislation to remove the last barrier. And the man running the company says passage is 90% likely within weeks. If you are sitting on 2,000 XRP right now, I need you to understand exactly what is in front of you before this month is over. Because the math I'm about to show you is not hopium. It's Standard Chartered Bank's published roadmap applied to a position that costs less than a used car. This is not financial advice. I am sharing publicly available information for educational purposes. Always do your own research. Before we get into it, drop your XRP count in the comments right now. I don't care if it's 100 or 100,000. I want to see the real distribution of this community. And by the end of this breakdown, every single one of you is going to know exactly what your specific position maps to at each credible price target across the next 4 years. Welcome back. I am the Calm Analyst. Around here, we run the math that most channels skip. We give you the bull case, the bear case, and the honest risks in between. Today we're doing the complete 2000 XRP breakdown, what it costs, where it ranks, what it becomes at every credible institutional price target, what's happening in the ecosystem right now, and the honest gap between Ripple winning and XRP winning that every holder needs to understand. Let's get into it. Let me start with why 2000 is the number, because it's not arbitrary, it's a threshold. The XRP Ledger has 7.85 million activated wallet addresses. The total estimated number of unique human beings who own any XRP globally is between 18 and 25 million. Of those 25 million people, only the top 10% hold 2,300 XRP or more. 2,000 XRP puts you right at the edge of that threshold. In the top 10% of a global asset, at the most important regulatory and institutional inflection point in that asset's 14-year history. 2,000 XRP at today's price of $1.34 costs $2,680. Less than a month's salary for most working adults in the developed world. Less than the cost of a used car. Less than many people spend on a vacation they'll forget in 5 years. And it places you ahead of 90% of every XRP holder on the planet. The median XRP wallet holds between 50 and 100 XRP. Most people who own XRP own very little of it. 2,000 XRP is not the median. It is not average. It is a threshold that the vast majority of XRP holders globally have never crossed. Now let me run the math. Because the question is not whether 2,000 XRP is a lot. The question is what 2,000 XRP becomes at each credible price target across the next 4 years. Standard Chartered base case, end of 2026, $2.80. Your 2,000 XRP is worth $5,600. You spent $2,680. A $2,920 gain. 109% return on the most conservative institutional floor in the market in 8 months. Standard Chartered 2027 target, $7. Your 2,000 XRP is worth $14,000. That is a 5x increase in less than 2 years from the most credible institutional research house covering this asset. 2028 target, $12.60, worth $25,200. 2029 target, $19.60, worth $39,200. 2030 target, held unchanged through the entire 2026 correction, $28. Your 2,000 XRP is worth $56,000. From $2,680, a 20x return over 4 years. At the broader analyst consensus for 2030 of $5 to $15, the range that doesn't require Standard Chartered to be exactly right, 2,000 XRP produces between $10,000 and $30,000. Even at the conservative end, $5 by 2030, the plan returns 3.7 times the investment. If those numbers just changed how you think about the $2,680 sitting in your wallet right now, smash that like button. This math deserves to reach every person who holds XRP and has never calculated what their specific position maps to at institutional price targets. Now let me give you the full context that makes those numbers meaningful rather than arbitrary. Because numbers without context are just noise. XRP was created in June 2012 with one purpose: build a global bridge currency that settles cross-border transactions in 3 to 5 seconds at fractions of a cent with no counterparty risk. The problem it was designed to solve is real. Banks globally hold an estimated $1.8 trillion in pre-funded nostro accounts just to facilitate international payments. Capital that earns nothing while it sits idle, waiting to be used. XRP eliminates that requirement entirely. Convert source currency to XRP. Send it across the ledger in 3 to 5 seconds. Convert to destination currency on the other side. No pre-funded account. No idle capital. Fractions of a cent total cost. From 2012 to 2020, that thesis was mostly theoretical. Banks were testing. A handful of corridors were live. Then the SEC lawsuit in December 2020 froze institutional adoption in its tracks. Exchanges delisted XRP, banks halted pilots. Institutional investors stepped back, and the token spent 4 years in legal limbo, while Bitcoin, Ethereum, and Solana attracted the institutional capital that should have been flowing to XRP as well. And then one by one, the barriers came down. July 2023, Judge Torres rules that XRP sold on exchanges is not a security. XRP jumped 75% in 48 hours. August 2025, the SEC drops its remaining appeals. Ripple settles for $125 million, less than 10% of the $2 billion the SEC originally sought. The legal cloud clears. November 2025, 7-spot XRP ETFs launch in the United States. Goldman Sachs discloses a $153.8 million position within weeks, the largest institutional XRP ETF holder in the market by a wide margin. March 17, 2026, the SEC and CFTC jointly issue a binding federal rule classifying XRP as a digital commodity alongside Bitcoin and Ethereum. Not a court ruling, not staff guidance, a codified regulatory classification with the full force of federal law. And today, April 1st, 2026, Garlinghouse says on Fox Business that Ripple Treasury processes $13 trillion in annual corporate payments and 0% has migrated to crypto rails. And he calls that the biggest untapped opportunity in finance. And he confirms he's pushing the Clarity Act to pass by the end of April. This is not a story of a company that might get there someday. This is a company that has already built the infrastructure, won the legal battles, attracted the institutional capital, and is waiting on a single piece of legislation to flip the switch on $13 trillion in payment volume. Subscribe right now, hit the bell, drop a in the comments, because the Clarity Act vote and the Goldman Sachs Q1 filing both land this month, and both of them determine which scenario in the Standard Chartered roadmap actually plays out. Now let me be honest with you about the gap between Ripple winning and XRP winning, because it's real and you need to understand it. Ripple just reported the best quarter in company history. Prime brokerage revenue tripled since the Hidden Road acquisition. Fortune 500 treasury teams are running on Ripple's infrastructure. Deutsche Bank, Aviva Investors, and Societe Generale started using Ripple's payment infrastructure in early 2026. And XRP is trading at $1.34, down 40% year to date, down 65% from the all-time high. That gap is real. The banks using Ripple right now are settling in RLUSD and fiat, not in XRP. The $13 trillion flowing through Ripple Treasury is flowing in corporate fiat currencies. Revenue from Ripple's acquisitions accrues to Ripple Labs equity holders, not to XRP token holders. This is not a criticism of the long-term thesis. It is the honest state of where we are right now. And it is exactly why the Clarity Act is the single most important event in the XRP ecosystem this month. Because the Clarity Act doesn't just make XRP's commodity status permanent, it creates the legal framework that allows U.S. banks, the most risk-averse, compliance-driven institutions in the world, to run on-demand liquidity corridors with XRP as the bridge asset without violating their fiduciary duty. Right now, banks defaulting to RLUSD instead of XRP is not a preference. It's a compliance decision. The legal risk of using a volatile token for corporate settlement is too high without statutory clarity. The Clarity Act provides that clarity, and when it passes, the legal obstacle to $13 trillion in payment volume migrating to XRP rails disappears. Garlinghouse said it explicitly. The Clarity Act unlocks banks in the United States and around the world to lean into this industry. That is a specific mechanism. When banks can legally use XRP for settlement without compliance risk, the choice between RLUSD and XRP becomes a cost and efficiency decision rather than a legal one. And on cost and efficiency, XRP wins. 3 to 5 seconds. Fractions of a cent. No pre-funded accounts. Comment below. Do you think the Clarity Act passes by end of April? Type April if yes. Type delayed if you think it gets pushed. Type 90 if you trust Garlinghouse's odds. I want to see the community's real read on the timeline. Now here's the honest bear case, because you deserve the complete picture. Adam Spatico at NASDAQ sees XRP potentially falling to 50 cents to $1 by 2030. His argument: banks settle in RLUSD and fiat without XRP. The token becomes irrelevant to Ripple's success. If he's right, 2,000 XRP at 50 cents is $1,000. You spent $2,680 to end up with $1,000, a 63% loss. That bear case requires the Clarity Act to fail, stablecoins to fully replace XRP's bridge role, and the institutional wave to never materialize. 3 simultaneous negative outcomes. Possible, not probable based on the evidence. Standard Chartered's own bear case without the Clarity Act is $2.80. With it, bull case is $8 near term and $28 by 2030. The entire spread between those scenarios is determined by one bill. The asymmetry is what makes the math compelling. Downside risk, roughly 50 to 60% loss on a $2,680 position. Upside potential, 5x to 20x returns over 2 to 4 years. Most financial instruments that offer that kind of risk-reward asymmetry require accredited investor status or decade-long lockups. 2,000 XRP offers it for $2,680 with full liquidity. Now let me walk you through April specifically, because the next 30 days are the most consequential in XRP's history. Senate returns from recess April 13th. Banking Committee markup targeting second half of April. Garlinghouse at 90% passage odds. Polymarket at 72%. Galaxy Digital's hard deadline. Clear committee by end of April or likely dead for 2026. Senator Moreno confirmed. Midterm dynamics close the window by May. The window is 3 to 4 weeks wide. Everything XRP has built toward for 4 years runs through what happens in that window. Then in May, Goldman Sachs files their Q1 2026 13F. That filing reveals whether the largest institutional XRP ETF holder held through the 43% decline or trimmed. $153.8 million went in at higher prices. If they held, every institution on the fence gets the signal that smart money stayed through the fear. If they added, the signal is even louder. Swift's framework targeting live launch with 25+ payment corridors by mid-year. The DTCC tokenization pilot continuing. NASDAQ targeting Q3 for tokenized stock rollout. Securitize building with the NYSE on tokenized securities markets. All converging in the same 90-day window. Let me bring it all together with the personal calculation, because that's what this breakdown is actually about. 2,000 XRP at $1.34 costs $2,680 today. That position is in the top 10% of all XRP holders globally. It sits at the threshold between the people who touched XRP briefly and the people who understood what they were holding and stayed. The commodity classification is law. 7 ETFs are live. Goldman Sachs is already in. The Clarity Act is 4 weeks from a vote that Garlinghouse puts at 90%. $13 trillion in Ripple's payment pipeline is waiting for the legal framework to tip. Swift just wired XRP into 11,000 banks. The DTCC has Ripple Prime in their directory. BlackRock is using RLUSD as a settlement layer. The Fear and Greed Index is at 8, extreme fear. Nobody rang a bell at 17 cents in 2020. Nobody rang a bell at 30 cents in 2023 when the SEC case started turning. Nobody will ring one at $1.34 in April 2026 either. The people who are going to be at every price level above here are the ones accumulating right now. Not because the outcome is guaranteed, because the setup is unlike anything XRP has seen in 14 years. And 2,000 XRP, $2,680, the price of a used laptop and a couple months of savings, puts you in the top 10% of a global asset at the exact moment every barrier that has held it back for 4 years is falling simultaneously. Run the math, make your own decision, but make it with the full picture, not just the red candles. Price is a distraction. Value is the reality. Structure is what matters. And the structure surrounding 2,000 XRP right now, regulatory, institutional, legislative, and mathematical, is the most compelling setup in the history of this asset. In a market fueled by emotion and noise, we thrive on data and composure. Remember, haste leads to loss, while calm analysis leads to victory. Comment, calm analyst, below. Tell me your XRP count and which price on the Standard Chartered roadmap you believe in most. I want to see where this community actually stands. And share this with someone who sold their XRP stack at a loss and walked away. Show them the math they left on the table. Like, subscribe, notifications on. I'll see you in the next one. Stay patient, stay rational, and as we always do, we don't wait for the future, we plan for it. Peace.